Welcome back. We've been talking about Robinhood as they make their public debut on the NASDAQ. Robinhood right now down 5 3/4 percentage point. Now, our next guest has been pretty critical of Robinhood, saying, quote, that they encourage people to go from training wheels to driving motorcycles. He then went on to say that over the long term, it's like trying to beat the casino. And he joins us now, Scott Smith Cerulli Associates, Director of Advice Relationships. Scott, great to have you here with us. We've had a lot of Robinhood bulls, I should say, so far in the show. So it'll be interesting to get the other side of this story. Now, obviously, you're quite critical of the company. I'm concerned, what part of the way that Robinhood operates really concerns you the most?
I think that my biggest concern is that the bulk of their revenue is tied to payment for order flow, as we all know, right? And to them, that means for them to earn more money, they have to encourage people to trade more. And from what we've seen over the course of history, rapid trading for individual investors isn't really doesn't really lead to great outcomes for them over the long term. Sure, when markets are going up, everyone can kind of ride that tide and make money in the short term. But the more trades you do, especially when Robinhood seems to be encouraging people into the options market where they make even more money on their order flow for options, it's just when you have the alignment of Robinhood's goal it seems to be, to get people to trade more, where end investors are usually better off with a buy and hold portfolio. So kind of incenting people towards more trading is usually not correlated with better financial outcomes for most retail investors is my biggest concern.
Scott, earlier today, our colleagues here at Yahoo Finance got to talk to Robinhood CFO Jason Warnick about the way they have helped to democratize investing and trading for millions of people. And take a listen to what he had to say.
Sure.
For so long, they've been left out and really not feeling welcome to participate. And by eliminating trading commissions and being mobile first and having no minimum account balances, we're just seeing really tremendous participation. Millions and millions of customers. Certainly our customers are more diverse than what we see at our competitors.
Is that true? I know he's, of course, tooting the horn of his own company, but has Robinhood done good for the average investor? Because we still have a huge part of our population, Scott, that doesn't participate in the stock market, believes it's out of reach for them. Has Robinhood helped to bring that, to make that a reality for millions of people?
I think the words you use there are important there, right? I think they've enabled many more traders to enter the market, millions of more traders, but I'm not sure that they've enabled millions of more investors to enter the market. In fact, I really think it ends up being more like speculators, right? So kind of beyond the absurdity of kind of clicking through a disclosure on a mobile after, reading tens and dozens of pages of disclosure clients are supposed to read, what does the equity research process look like for these investors? Are they going through, 10Ks or earnings reports or anything like that? Or are they, complementing with taking in programs like your own? What does that actually look like? Because keep in mind, these millions of retail investors they brought into the market buying individual securities are going up against tens of thousands of CFAs and other qualified professionals who spend all day looking at trying to figure out what they think the correct current and future prices of these stocks are. And this is really just that's a difference in capabilities and skills and resources at their disposal. If Robinhood investors understand the risk they're taking and they're only trading with money they can afford to lose, great, more power to them. They can maybe learn a bunch of new things. But if they're trading individual securities with money they're relying on for short term, it's really a recipe for failure. We have tens of thousands of people really looking at these stocks every day, and kind of people looking at their mobile phone and being like, "Yeah, buy." I really don't think there's a research process there that's defensible for most of them, I would imagine.
I want to talk again about one of those trades that Robinhood was really counting on a lot of investors to make and a lot of the users of its platform to make, which was for Robinhood, the stock itself. And unfortunately, I don't think that the demand necessarily was as high as they were anticipating. Now, in advance of their IPO, they had an open roadshow that they live stream online. And when I'm listening to some of the questions, some of them I think were some of the questions that you can expect to hear from someone asking a CEO in advance of a public debut. But some of them were a little bit more asinine. Actually, not a little bit more, a lot more asinine, like, what is your favorite planet? So I'm curious to know, If now that we see, rather, I should say, Robinhood involving more retail investors in the IPO, we see how that's going so far. If you think that future companies down the line should also include some of these retail investors, some of whom, as you were describing, not as savvy, more like gamblers in Vegas than investors, if they should be more involved in the investment process of a company going public.
Yeah, I don't think I don't think having the retail investors involved in this IPO is any kind of a problem there. I think that's great. Again, I love that aspect of democratizing investment finance for everybody, right? We've seen these giant pops in the past where something came in at 38 and went to 100. I don't think people should be excluded from that. But it's a matter, I think in this case, it's a matter of the firm itself, the investment itself, right? You look at Robinhood, despite them having what they call a radical customer focus, right? They had $65 million fine back in December of 2020 for misleading customers and failure to satisfy duty of best execution. A couple of weeks ago in June, $70 million for widespread and significant harm caused by customers. We still have open investigation from the Security Division investigating substantial and continued risk to Massachusetts investors, plus dozens and dozens of other lawsuits from users of the platform and many other people as well. Plus, we have the SEC looking into payment for order flow and whether or not to be allowed to continue, right? I think back to a famous quote, right, where Maya Angelou told Oprah, like, when someone shows who you are, believe them, right? And then Oprah thought it over again, thought about her situation and came up with, when someone shows you who you are, believe them the first time. I think Robinhood has shown us who they are plenty of times, and that's a firm you want to invest in or with. Buyer beware, from my perspective.
All right, we're going to have to leave that there. Scott Smith, Director of Advice Relationship for Cerulli Associates, thanks so much for joining us today.